Its share price has cratered since its last earnings update. So does this mean that investors are starting to switch off when it comes to Netflix? Hello, I'm David Jones, and I thought we'd take a look at Netflix's share price, given they've got their latest set of earnings coming out in October. It's had a really tough time during the summer since the last earnings update. In this video, I'm going to talk about that in a bit more depth and why it happened. Before we get into that, let's just have a quick catch up with what happened with the share price. We'll come back and talk a bit more about the fundamentals, look ahead to the next set of earnings, then jump back on the chart and see where the opportunity is. But first of all, let's have a quick look and see what's been going on. As usual, if you're enjoying what we put out on the channel, make sure you're subscribed. And if you click the alarm bell notification down there, you get an alert off YouTube every time we upload our latest view of a stock. But let's get into the chart for Netflix. So let's have a quick look at the full history for Netflix. Then I'll talk about it a bit more and we'll come back and look at things in a bit more detail. But we're going right back here to the beginning, back to 2002, when they were less than $1 a share. Clearly, of course, the business has massively expanded since then, been incredibly successful and traded up to about $4.20 in June 2018. But look what's happened since those earnings. The latest set of earnings came out. You can see where they came out in July by the gap on the chart. The shares are trading just above $360. Earnings came out, market disappointed. I'll talk about why in a second and what we can expect for the next earnings. And here we are back at levels seen really at the beginning of 2019, end of 2018. I'm going to talk now about the earnings and what to look out for in a bit more detail. Then we'll come back onto the chart and see where maybe the opportunities are ahead of and after the next set of earnings. We're going to jump back on the chart in a second and look at things in a bit more detail. But first of all, let's talk a bit more about those July 2019 earnings and what went wrong. So when it comes to earnings per share, the market was expecting Netflix to make about 56 cents. It came in making 60 cents a share. That's a positive, beating expectations. But where the market was disappointed was with what was going on with Netflix subscribers. Expectations were for Netflix to have added something like 5 million new customers during the quarter, but they revealed they'd only added something like 2.7 million. Now, of course, most businesses would be more than happy to add more than 2.5 million customers, but this is well short of what expectations were. And clearly, new subscribers are a key part of Netflix's growth. That's why we've seen the share price hit so hard. Since those July earnings came out, the share price has dropped by more than a quarter. It's about 27% off over the last few months. So these next set of earnings for Netflix are going to be incredibly closely watched. They're due out on the 16th of October. When it comes to earnings per share, market is expecting just over $1 a share, about $1.04 a share for Netflix's earnings. Also, of course, they could well start coming under increased competition from Apple's new streaming service that it announced at its major event. Plus, of course, we've got the Disney Plus coming online, so Netflix may well start to feel the squeeze. Those subscriber numbers are going to be the really key ones. As usual, you'd expect the share price to be pretty volatile in the run-up to and when the earnings are announced and immediately after. So let's look at some of the big levels to watch. So I've picked out what I think are three key longer-term and shorter-term support and resistance levels. Let's start with resistance first of all. So to focus on what I think is the most immediate level, it's the one from September. We'll take a look at it in the chart in a minute, and it comes in around about $302 a share. So Netflix has not been able to break that. I think the support side is actually a lot more interesting from Netflix because it has fallen so far. So I think we've got a couple of key levels to watch on the downside from here. So the most recent low we've seen for the Netflix price is around about $252 a share from September. After that, we've got to go back to December of last year and around about $231 a share. Basically, if Netflix is going to start turning around anywhere, it needs to really start seeing some strength from here. But we're going to explore this a bit more in the chart now and identify really which way the major trend and the shorter term trend is, and look at these big levels in a bit more detail and see where the opportunity could be. So I've put some simple indicators on this chart. It's a daily chart, and we've got the yellow line here is a 20-day moving average. That has done a pretty good job, as you can see, since those latest earnings of really keeping the price under pressure. At most, Netflix shares have spent a couple of days above the 20-day moving average before turning lower again. At the moment, that 20-day moving average is coming in just above $280 a share. So I think that's one level to watch. The RSI, not surprising, down here, has been oversold a couple of times since those earnings came out. But this is a market, this is a share that has been under pressure. The oversold, we have blipped out of oversold, but haven't got anywhere near overbought. It did go oversold again in the last couple of days, so maybe we'll see, a slight recovery higher. But for me, the risk is that trend is still down. But sticking with that subject of trend lines, this is why I think it's interesting. If we take the trend line back to 2016, so we go back 3 years on the chart here, back to those lows, just below $100 a share. This trend line did a pretty good job on the way up, all the way up to towards that 425 area. It sold off, and it only spent, you can see, a couple of days below the trend line at the end of 2018 before rallying once more. You can see what's happening lately. Let's just zoom it in. So we've now spent more than a week below this long-term trend line, this 3-year trend line almost. And I think the question now is this uptrend over for Netflix? And I'd be tempted to give it a second chance. We have broken below that trend line, but we do see markets break below trend lines only to recover. It doesn't necessarily mean the market's going to fall off a cliff. So for me, the really big levels to watch, I talked about them when we were looking at support and resistance, but I think over the next couple of weeks into these earnings, for me, the really big level to watch is this low ahead of $230 a share. And that's the lows from December 2018. I think if we start to slip below there, a lot of people are going to be negative for the year on Netflix, and the risk is that's going to spark off more selling. But I think in maybe the short to medium term, perhaps we'll see Netflix start to build a base down here and recover. Maybe we don't see the 400 plus highs anytime soon, and a lot of this does hinge on the earnings. But for me, the big level to watch for the potential of a bounce is around about 230. So maybe we'll see Netflix have another sort of last gasp chance at recovering from these levels. So that's it. I think even though that trend line, we've seen the price below it for more than a week now, we do get false trend line breaks. We do have that major level left from last year. Let's see what the next couple of weeks bring and what the Netflix earnings look like. As usual, we will do an update when these earnings come out and look at Netflix afresh. To never miss out when that comes out, just make sure you're subscribed and click on the alarm bell button to get a notification. But for this look at Netflix going into earnings, we'll leave things there. So from me, David Jones, good luck with your trading.